Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF conference. And I'm here with Ben Johnson, who's head of Global ETF Research at Morningstar. Ben, great seeing you and great conference.
I'm glad to be here, and thanks for being here, Tom.
Well, it's an honor. And run through with us some of the key points that you folks are talking about today. I mean, you've got the best of the best in the ETF industry here, but there's a lot going on.
There's a lot going on, and we had a great opening keynote last night from Vanguard's Joe Davis to set the stage, to tell us a little bit about what's going on in terms of the macro backdrop and the outlook for investors. And frankly, it's pretty somber, and we can't control that.
Yeah.
And I think that's one of the key points of emphasis. That's one of the common themes that you see sort of popping up throughout this conference, throughout our agenda, is that there's a lot out there that we can't control. We can't control what the Fed's going to do. We can't control what the economy is going to do. So investors need to refocus and have a laser-like discipline and focus on what they can control. And what they can control, more than anything, is costs. That's something that's come up time and time again in the early innings of our agenda. And they can control their own behavior, or at least try to the best they can, to stay invested through thick and thin, to use low-cost funds, and we see that. We're seeing more and more of investors' focus in terms of at least the funds they're investing in is really centered around costs.
Right.
So the data we look at, you see going back to 2003, 93% of investors' assets, their new investment capital, has gone into the lowest of low-cost funds. So it's really about, I think, recognizing what's going on in the macro backdrop, realizing you can't control that, but you can control what you're paying and you can control your own behavior.
So with that being said, they got the right ETFs for the right price, but the question is now, in this time of volatility and possible corrections or threats with rising interest rates, is it going to stick? You know, that's one thing that this industry is worried about, because the assets have doubled from 1 trillion to 2 trillion in just the past 4 years. The big fear is, well, they just came in, and although they got their low costs, we may have some threat to the potential appreciation or even depreciation.
Yeah, so clearly there are headwinds in terms of what's going on in the markets. Markets have gotten volatile. We've kind of been lulled into this full sense of security over the course of the past 6+ years, as everything's been moving up and to the right and up and to the right, and volatility's been very low. You've got to realize that that's kind of an anomaly. Things go up, things go down. The key is to stay invested throughout. And what we've seen specific to the ETF industry is that when we go through those periods of volatility, it actually drives more investors to, at least it has historically, you look at the financial crisis, to ETFs, and it drives activity in ETFs higher as different types of investors look to ETFs as a way to protect from the downside, to look to them for liquidity, to hedge against different types of risk. They have a multitude of uses. So, you know, if there's any silver lining, at least as the ETF industry might be concerned, it's that, you know, volatility is actually tended to be positive for broader ETF adoption.
Do we need to do a better job, those of us like Morningstar, like ETF Trends, on education? Because a lot of people want to talk about volatility, they want to talk about smart beta. Nobody's talking about emerging markets. Nobody's talking about commodities, and nobody's talking about China, when we've seen huge corrections in those areas. Valuations are very reasonable. Are we doing our best to help educate investors to make the right decisions at the right times?
Everyone can always be doing more to help educate investors in terms of what's going on in the markets, how to use ETFs, how to just, again, control their own behavior. So whether it's us at Morningstar, whether it's you at ETF Trends, whether it's the providers in this space, the market makers in this space, educating investors as to how to best trade ETFs, we've all got this sort of collective load to really continue to lift, because you've got more and more investors that are new to the space coming in using ETFs every day. This is a mission that will never cease. This is a space that's only getting more complex, and it's just making our jobs maybe a bit more difficult, I'd say a bit more fun, a bit more engaging, because at the end of the day, we're just trying to help investors to make better calls.
So you and I will continue to shine up our suits of armor and fight the good fight, right?
Precisely.
Good seeing you, Ben. Thank you.
Great to be here, Tom. Thanks.